All right, all right, all right. You are looking live at the Nasdaq, which was up 0.007% again today for 2 days in a row, which is kind of just an oddity. Maybe we'll have a Casino Royale here pretty soon. I don't know. But you can see yesterday was up 0.007. Today, 0.007. How about that? It was up by 9.45. And today 9.84, which is, I call that 10 points. Anyway, it doesn't matter. The Nasdaq closed at 14,113, and it was down, most of the day. I would say it was down, and it did not overtake the 14,149 from September 1st. You could see yesterday that it did. The high was 194. Today's high was 130. That's not significant. It's just what is significant is that we're in a power trend. We had a big move on Tuesday, so sideways action is good. We can go sideways for a while. Next Thursday is Thanksgiving, so we're going to probably start seeing a little, lighter volume as we've seen here as we head into the holiday next week. Anyway, the Nasdaq is looking really good since we had this 12% correction in August, September, October, and now we've ran through the 50 and gotten into the power trend where the low of the day is above the 21, the magenta line here. So it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay, so 10 days is all it needs. And so we're in a power trend. Doesn't mean your stocks are going to go up every day. But it does mean that it's a buy the dip mentality. We have the tailwinds and support from the market. Until things change, we're going to stay with that theme. Okay, it still looks pretty good to me. I want to get through the Russell, because the Russell is not participating. I don't know why. It got rejected at its 200 SMA on Wednesday. Close with it like an inverted hammer candle, which is something you want to avoid, because what does it lead to? The next day is down, even though. So this is the risk on index, and you want to see this do better. How about that? Because the 10-year yield has been going down. It's below 4.5%, and typically, that would lend to thinking that maybe the higher risk stocks will do a little better, but they're not. The IWM is struggling, as you just saw. It is trading below its 200 simple moving average. Maybe it'll get going. I don't know. It's got this little head and shoulder inverted head and shoulders pattern here, and I thought it would rip through, but it just met with resistance here, and who knows, maybe it'll just rally through here eventually. But we'd like to see a broadening of this rally, and these 2,000 stocks on this index are smaller than the size of Apple and Microsoft, if you can believe it. These two stocks are bigger than the entire index. Apple's looking very good. I could see this on our ready list here pretty soon here. It crossed over 190 after hours. At 189.98 looks good. 190. Just a lot of strength there in Apple. Microsoft I think it's going to surpass Apple as the largest stock in the market because of its enterprise value. They had a meeting yesterday with analysts, and it was well received, obviously, with the move today of $6.50. But it's an enterprise stock, where Apple is more of a consumer stock. And if the economy slows, and it looks like it is, and I'm going to get to that later with the Walmart comments, but Apple's a consumer and this is an enterprise. I think the enterprise will do better if in an economic slowdown. I think if the consumer pulls back before the enterprise will. But anyway, Microsoft, just we've had it on our watch list for a while now, because I had it at 340, and then I just kept it on because it was building the right side of a base. And I thought it was going to pull back here to at least it's 10, maybe it's 21, but it doesn't want to. And it's going to do what it wants to do. There's nothing we can do about it. I talked yesterday about swing traders. If you're, long and want to trim, that's fine. If you want to hold it forever and a day, that's fine. And if you want to just say, hey, 340 to 370, I'll take my, $30 and get out. That's fine too. But Anyway, Microsoft looks very good. Meta Platforms looks good to me too. It's got this consolidation, a cut below the 50, the undercut and rally trade. Made a high here and then pulled back today to its 10 EMA and found support. I'm going to talk about that a little bit later because people are thinking that it's a boring tape, it's slow, but you want to see in slow tapes your stocks pull back and being supported at moving averages. And Meta certainly was. Amazon, if I could type the ticker symbol in, this one pulled back to its 10 EMA as well. I like that move. You know, it'll tell you a lot. Pullbacks tell you a lot more than just ripping and roaring, because you don't know when they're going to stop. But here, a pullback, when you see support, then you know that a lot of the machines are programmed to buying Amazon here at the 10. So that's valuable information, I believe. Google, this one undercut. It's 50, finally rallied through, and this one's looking a lot better now. Above the 50, had a nice day today, up 1.72%. So you can see that these Apple, Meta, Microsoft, Google, this is a flight to safety. And even though, the index is barely up, these stocks are being bought. So this is kind of like a safe haven trade here still. So that's why I say the Russell's got to break out. The Russell's got to move. We got to expand this rally to more stocks and not just the beaten down stocks. Tesla was down 3% today, got rejected. It got the Matambo treatment there at the 50. We'll see if it can rally back through that level. And then NVIDIA, this one looks really good to me. It's just got this double bottom base pattern. It's in this actionable area around 476. Went up to 500 yesterday and pulled back just a little bit. Now they have earnings next Tuesday, and that's going to probably, I think the implied volatility is like a 9% move. So it's probably going to go to 550 or 450 before too long. I'm long NVIDIA, so I'm hoping it's going to 550, but you never know. And it's always wise to be safe going into earnings and not have too big of a position. You don't want to be too heavy and have the thing crash on you. Anyway, I want to look at some of the semiconductor stocks. AMD, I've talked about this one a lot. It's just, broke above that downtrend line. There it is. Anytime it touches 3 places on the downtrend, that considers a downtrend line. Then it busted higher, and now it's just going sideways as the moving averages catch up. So I like the looks of AMD here. What are some of the other ones? Intel and AMD are competitors, but and it just broke out today out of this base. I did not have this one on my ready list. I didn't have it on my bingo card, but you could see here consolidation, move up, consolidation, move up, consolidation. And there it is, stage 1, A, B, C, D. And today, this week, it's up by nearly 12%. So good for Intel. And congrats to the longs. It's not a stock that I'm interested in because it doesn't really have the growth and it doesn't move that much, but it did today. Applied Materials reported after the bell. I got to go through their numbers. It looked like good numbers, but I've just got to look at it closer before tomorrow. Down $10 or nearly 7% after hours. So we'll see what happens there. It's got a nice double bottom base pattern. If it trades back to that 148 area or it's 10 EMA there, that might be a point of interest for longs to be actionable there. The 21 is 144, so it's right there after hours. Anyway, that's it for the semiconductors. I want to move on to the software and the hardware group. KD, not the basketball player, but Kyndryl Holdings. This one traded at a new high today. This one's been on our ready list and our watch list. It's just a slow mover. Not really a stock for me. But it is set up in a base and it is making new highs. So we always like new highs. So if you have that one still looks pretty good. Still actionable as it pushes away from that base there. Another oldie but goodie. I mentioned Intel, so I better go with IBM, right? Because I got to go to the weekly here. This is a long consolidation period. This is the cup with handle pattern. It's starting to break out. Once again, slower moving stock, kind of like Intel, pays a dividend. A little more growth here, but it's actionable at that 150, 193 total a standard buy point there for IBM. So that one looks pretty good as well. Logitech is a hardware play, computer hardware play, and this one made a new high today and then pulled back slightly, but this one has just been ramping out of this consolidation here. As you can see, this double bottom pattern in the last 4 weeks, it's been up 4% this week. So that one looks good. SMCI is another hardware stock, another double bottom, but it hasn't broken out yet. It had this big move on Tuesday, and now it's just pulling back, allowing the moving averages to catch up. I put this on our ready watch list because you need to eyeball this one here. This one is you've seen it's got the ability to really move, and I like this above that downtrend line there at the 298 level right there. Let it go above 300, and that is definitely an area of interest for me, and maybe it'll trade in here sideways for a couple more days or weeks, but the more it pinches in, the more it tightens up there, the better I like it. I don't own it or anything, but that's starting to look pretty good. All right, I'm going to get to the retail stocks because Walmart had earnings this morning, and they sounded the alarm on the consumer. You can see it was down more than 8%, and heavy volume. They talked about the consumer slowing. The food, they're blaming the Lilly and Novo Nordisk, the Ozempic and Mounjaro, the weight loss drugs for not as many people buying food, and the price of food coming down. So it's like a disinflation, I guess, or deflation, you could call it. But anyway, that's a big retailer, and for a move like that, it's got 420 billion market cap, and it got a nice 8% haircut today. So the comments from the CEO was not good, and it was just the last few weeks, I said, of the quarter in October that the consumer started to slow. So, and this feeds into that narrative that the Fed is done and they'll be lowering rates next year. I'm not a real proponent of that, but that's what they said. So, you got to go with it. Sometimes CEOs, they throw in the kitchen sink and throw in the worst and then have their stock go down only so they could, beat their expectations the next quarter. So you got to take that with a grain of salt. Wingstop. I still have not been to a Wingstop, but this stock looks fantastic. You can see how it built the right side of that cup there on the base. It's a cup without handle, much like Microsoft, but this thing is looking really good. I should have had this on our ready list, but I didn't, and that's my bad. But anyway, Wingstop looks great, and I've got to get to a Wingstop. We have them here in town. I hear they're really good. Williams-Sonoma. They reported a strong quarter this morning, gapped up and was up 6%. I must admit, I contributed to the quarter there. My wife and I go there often. It's a really nice store. If you look at the weekly, you can see the long consolidation period here for Williams-Sonoma. It has been since August of 2022, so about 15 months here of consolidating cup with handle and finally breaking out today. Had a nice 15% move this week. That's pretty sweet for Williams-Sonoma. You can see it undercut its 50 and rallied right back through. It's got that blue dot there, and you could see the relative strength line went right through the industry and the S&P group 21 EMA. So that one is outperforming big time. What else do I have? Oh, Celsius, poor Celsius. That was a big seller in Celsius. Can't go anywhere. I'll just say about Celsius that it continues to hold that 50. It was 50 there, 50.14. Yeah, it went below it, but I would just call that a retest, right? It had the 50, then it had a retest, and then another retest. And you might say, gosh, with all these sellers out here, how come they can't push it lower with the heavy short interest? So that's an area of interest for me. I don't like bottom picking, but that if they can't push it below 50, maybe that's a bottom, but we'll have to wait and see. I'm not interested in jumping into stuff like that. Chipotle Mexican Grill, I am interested in stuff like this. Anything that makes new highs, which it did today. above the 2175 there. Chipotle looks really good. And I wanted to talk a little bit about, yesterday I talked about the stocks that were going up, not chasing the shiny objects. If this is Victoria's Secret, is up a lot in one day, and that's just short covering. Everything is downtrending here. All the moving averages are trending lower, lower, lower. This is a stock in a downtrend, and yeah, it went up like 4%. But so what? This is the stuff that I know my strengths, I know my weaknesses, and I know not to chase stocks in a downtrend. Just I call it chasing the shiny object. Yeah, they go up one day on short covering. Usually those are the big moves, right? Peloton had 2 days, 15% and 8%. That's real attractive, right? A 15% move, woohoo! But then it just sells off 4% again today. It's just got no power, got no strength. It's in a downtrend. Why buy stocks in a downtrend? I mean, if it's not my style, if it's your style, that's great. But it's just not my style to buy stocks in a downtrend. I want to buy stocks that are being supported by institutions that are in uptrends. Chegg was another one. Somebody was pointing it out on Twitter that, it's up 18%, stock buyback. Woohoo. That's just not my style. It is setting up here in a stage one base, but everything's downtrending here. So Chegg is just not my thing. InPhase was a big winner a long time ago. It's clearly in a downtrend. Yes, it had a couple days where it was up, 16%. I know that's real seductive, to chase that stuff, but I'm just not going to do it. Not my style. I know my strengths and weaknesses. Crocs, another one, clearly in a downtrend. It did trade above its 50, had a couple nice days here at 10 and 5%, but then pulled back today. Like I said, just not my style. If they form a base, get above moving averages, get all the sellers out and get some institutional support, then I'm interested. But I'm telling you, I don't chase that. Anyway, I'm going to get off my soapbox and say thank you for watching. That's it for me today, except for I lie in honor of the great Steve Jobs. I want to go through what I do on days that we have, not pullbacks. Today, I wouldn't call it a pullback. It acted like a pullback, but it was flat. The last couple of days, the Nasdaq has been flat, and we know that Apple and Microsoft have been pulling it up. A lot of stocks are trading down or flat. And so what I look for in this boring tape, I don't think it's boring, but some people call it boring, as I look for my stocks to find support. And if they go below the 50, that's okay. If they don't slice the 50, with a vertical violation, with something that looks like that, with, massive volume, I'm going to hang in there on a stock like this. This one undercut for a couple days and rallied up. Usually I wait till the end of the week, to see if they're going to close, near or above. If you see my leading stock list, I've been a little more cutthroat lately. As soon as they drop below the 50 on the Friday, I just cut them loose. But this one found support. It traded down on Wednesday, found support and bounced more than 3% today. And that's kind of like machine trading where, it's just programmed to buy this stock at the 50. I showed you Meta earlier. It was supported at its 10. Eli Lilly is down to its 21. Now we'll see if it finds support. It was just flat today. So I'm looking, it could come down to the 50 or it might find support at 21. So that one is still up in the air. Ross Stores is another one that I noticed pulled back to its 21 today and is up nearly 6% after hours. 127. So that's going to make probably a new 52-week high. Tomorrow, it's up nearly 7% on its earnings report. So that's what you want to see, bounces off of support. So don't give up on a stock just because it pulls back to its moving average. That's valuable information. Here's Deckers. It undercut its 10 today, closed right at it. We'll see if it finds support tomorrow. Let's get the actual numbers here on Deckers. Yeah, Decker's 10 EMA is a 616.26 today. Yeah, so it's right there. It's been going up, it's an uptrending. Yeah, it's going up, a couple bucks a day here. So tomorrow it'll be higher. So we'll see if Deckers can get back above that, get back above the 620 level. But that's what I look for. I want to see if My stocks are the stronger stocks. The leading stocks are getting supported at moving averages. This is Costco, which had a nice move and came down today on the Walmart report, and it looked like it's going to get support here at the 10, and it closed it's 576 is the 10, and it closed at 578, so a couple bucks above it. And Lululemon, another retail, Walmart's a big one, so it really had an effect today. This is Lulu pulled back to its 10, 416, found support, bumped up $4. And anyway, that's what I look for. That's valuable information to me because it tells me where the stock is getting support. Like Microsoft, it's just going higher. I mean, it's not really telling you much. It's great if you own it and you're long, woohoo, we're going up every day, but you don't really know where resistance is. You don't know where it's going to pull back, and you don't know where it's going to find support because the last time, it undercut its 50, then rallied back through. Of course, this is when the Nasdaq was, correcting for 3 months. But since this has been a total leader since the calendar flipped to November. So, like I said, this isn't telling you as much. Yeah, this is starting the rally here in the follow through day and whatever. But I think this tells you much more. Pullbacks and support and bounces. Yeah, and I like that little bull wedge pattern here on Novo, so that's going to stay on our ready list. Anyway, that's it for me today. Thank you for watching at MC Stock Charts. We never give up.